Hi everyone, today let's talk about the upcoming Fed meeting, then we'll look at the economic calendar, then we'll get into the charts, as well as my results for the week and my thoughts going into the Monday session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So the Fed is set to have their meeting next week, and they are likely to pause based on the percentages right now. And that's what they're saying here. It seems like they're not going to rock the boat too much at this FOMC meeting. We'll get to the schedule later, but you can see it is slated for September 20th at 1400 Eastern Time. Rates currently pricing in a 98% chance that we're going to get a pause. But despite that, we are expecting that they're going to continue to maintain that hawkish tone. They continue to say no cuts, and there's not really a lot of time for them to cut this year. And at this point, I think the market generally believes them. We're waiting for cuts next year. But the question is, when is that going to happen? Inflation expectations from Michigan did come in quite low this week. And it does seem like most of the population believes that inflation is going down, which is part of the precursors to lower inflation. However, we did see actual inflation go up this last iteration, and they do show that here, CPI year over year, higher than expectations, and much higher than the previous read. We talked about that after it came out. I'm sure that they're going to mention that the data was not great, and based on that, looking at the December numbers, we're looking at about a 40% chance of another rate hike in December, which would give us the 2 hikes that they projected earlier this year. The author of this article says that he is short the S&P, the NASDAQ, and the Russell via the ProShares ETFs. And based on this structure, it does seem like that's a good call. We were down quite a bit today, so hopefully that's going well for them. But just keep that in mind when you look at this evaluation. Moving over to fear and greed just for a moment. We basically have not changed. Previous close, 54. Previous week, 51. We're right at 52. We've been in the middle of that triangle, so we've been seeing that for a while. Moving averages, still in greed. Relative strength, fear. Breadth, definitely in fear, but you can see we have a little bit of holding in this zone. We've been talking about that for a while, and we'll look at it again later. Put-call ratio, pretty high. We've been talking about that as well on Max Payne. Market volatility in that same range, finding a little bit of strength. Safe haven demand neutralized, and junk bond demand still in extreme greed. Looking at the AAII survey for the 13th, we have basically neutralized here. We're lower than the historical average on bulls. Bears a little bit lower than average as well, and you can see this neutral section much bigger than average. Makes sense, and that checks out with the market structure as well. Looking at the economic calendar just for a moment, we got CPI for the Eurozone on Tuesday, nothing here on Monday. Building permits at 8:30. Looking at Wednesday, we just talked about it. We have FOMC, that's going to be the big one for the week. We got Philly Fed Manufacturing Index at 8:30 on Thursday, as well as existing home sales. And then on Friday, not much at all. S&P Global Composite PMI, as well as Services PMI, that's the bigger one, as well as Manufacturing PMI. Moving over to Max Payne for the 22nd, very few options, less than 700,000, so it doesn't hold a lot of weight, but it is still interesting. Decent amount of puts here at 444 and 450, still a lot more puts than calls. Overall, not a ton of options, like I said, but still very few calls, quite a lot of puts. And Max Payne is actually quite a bit higher than current prices, up to that 448, which would give you about a 1% move higher from current levels. Moving over to the charts here with the S&P on the weekly chart, you can see we got a bearish candle down 0.16% on the week. Definitely not great. Momentum continues to go lower here. We now have a high, lower high setup, and you would expect this to follow through to a lower low. You got the 21 EMA sitting at 43.70, as well as trend support sitting down around 43.46. If this area breaks, you could see a massive move down to the 144 EMA sitting all the way down at 41.86. Obviously, I don't think that's going to happen all in 1 week, but if this section gets taken out this week, and then in 2 weeks we see another leg down, that would be huge, down to this highly traded zone around that 41.30 area. Looking at the SPY on the daily chart, we've been watching this wedge for a while, and we saw it on the chart on the article as well. We came into that resistance, We were looking to see what was going to happen, get a final test of the actual trend. Didn't quite get that either. We ended up gapping down and falling. We're right in an area where you could find some support, kind of continue to chop in this wedge, certainly possible. But if this area breaks down, just like we talked about on the weekly chart, this could be a bigger leg down for sure. And right now you do have to respect this as an island reversal. So we gapped up, gapped back down, fell dramatically. It does look weak, big volume on the leg down, and I would expect this to cross over into bearish momentum going into next week. Moving over to the NASDAQ on the weekly chart, you can see we are at trend support. Similar setup, high, lower high. On the weekly chart, bearish momentum, bearish RSI. You would expect this to be bearish. If it holds this level, could absolutely push up to this next resistance around 15,800. That would be a nice little move higher. But if this breaks, you're looking at the 21 down at 14,755. That would be a big leg down basically to these previous lows here going back to mid-August. And then if that breaks down, which it certainly could based on this structure, then you're looking for a big leg to this next support down around 13,700, which would be very close to this August high going back to 2022. Moving over to the daily chart, you can see we had a high, lower high setup, broke down. Now you have a high, lower high setup again with a pretty big breakdown. We didn't take out the midpoint yet, and like I said, I'm still watching that 370 level. Pretty important level with the 21 EMA sitting right there. If that breaks down, I do think there's going to be a much bigger move down to this next highly traded zone, 364.55. Also, you have to respect that this is now a high, lower high on the bigger time frame, which does look pretty weak in my opinion. Moving over to the Russell on the weekly chart, you can see a bearish candle. We still held that level at 183.28, and that is an absolutely critical level. If this breaks and it holds below that level, gets to the 55 down at 181.70, then that level breaks and you get down to 179.17. Then we're looking at these previous highs. We've been consolidating in this area for a while, but we're at a very interesting point. If it breaks down, you're looking at several percentage points of downside potential. Bearish momentum, bearish RSI. You can see this huge volume profile, tons of volume right where we are, continues to be a highly traded zone. If this area breaks, you can see just how little volume there is between those two levels. Then the next level of volume right in this previous consolidation, meaning I would expect it to move through this area pretty quickly. So it either holds now or breaks down pretty strong to that next area. Moving over to the Russell, you can see we are right at that 200 SMA, absolutely critical level, tons of volume. Zooming out just to get a better idea of that volume profile, you can see it ends basically right where we are. So it's got to hold right here, otherwise no volume through this zone until we get back down to this 175 to 173 area. Bearish momentum, bearish RSI, big volume. Again, if this breaks down right now, that's going to be pretty bearish in my opinion. Moving over to the Dow on the weekly chart, you can see we still have that high, lower high setup, but we really haven't moved that much over the past few weeks. Consolidated, moved higher, consolidated, moved lower. We're basically unchanged, up just a little bit from this previous consolidation in June and July. Zooming in here a little bit, you could argue that this looks a little bit more bearish. You could argue that we'll get a little bit of follow through, at least down to that 21 EMA, down at 342.88. Certainly possible in that zone, but just look at this volume profile. There's pretty much volume everywhere. If we get down to the highly traded zone, you would expect it to hold in there as well, potentially bounce from that level and get a continuation back up to these previous highs. If it breaks down through this highly traded zone, though, then you're looking for a move back down into the 320s. That would be a much bigger move, and that would start to switch the trend as well. You also have the 200-week moving average sitting in that area at 316.71. Otherwise, momentum is bearish and RSI is definitely bearish. Moving over to the daily chart, you can see we've been consolidating for a while. Gap up, gap down, though. We do have that same island reversal type setup, which looks pretty weak. It's also a lower high from this previous high. It also didn't get to that 350.92 area that I was watching. Previous consolidation low, broke through that level, tapped it, continued lower, came up, retested, broke down, couldn't quite get there, broke down again. All of those are pretty bearish signals. It almost looks like a flag setup. So we have a breakdown, flag, and if we get that follow through to the downside, take out this previous low at 341, then we're looking for a pretty dramatic move back down to this previous consolidation like we talked about on the weekly chart. Moving over to the equal weighted S&Ps, looks very similar to the Dow, really hasn't changed very much. We've been in this area for a while, and look at this volume profile, just piles of volume right in this area. You could maybe argue we're going to break down from current level down to 148, be about a 1% down move to that 55 EMA sitting at 144.41. Bearish momentum, bearish RSI, so it does make sense. But at this point, I wouldn't really expect it to break down too dramatically. You also have this trend line going from this high, marking this previous high, marking current support, which is interesting, as well as that 144 sitting at 146.87. Moving over to the ratios, SPY Russell and NASDAQ Russell. You can see SPY Russell did break out. It did get a new high close, but it really just got up to that 242 level and then broke down. You can see zooming out, this goes back to the highs here in February of 20. Super critical level, couldn't hold above there. It did break down a little bit. Momentum is still bullish and RSI is still bullish here. Similarly, on the NASDAQ Russell, broke out above my 818 level, held above it, threw a wick and then pulled back a little bit. Momentum still bullish, but you have clear divergence here, much lower RSI, much higher pricing. And at that point, you would expect this to break down eventually. It's not happening yet, still a bullish trend, but something to pay attention to on that divergence. Moving over to Apple and Tesla, you can see Apple breaking down, holding below my 176.15 level. Looks super bearish. You can see we have been holding these lows around 173.74, but really I'm not watching for a strong support until we get down to 170.90. And you can see on the weekly chart we're below all the EMAs and SMAs, 9-week moving average getting very close to breaking through that 21. And then if all of that continues to progress to the downside, then you got the 55 EMA sitting all the way down at 160.98. And that would be a pretty dramatic move, about 15 points to the downside. And it definitely seems possible at this point based on the structure we're seeing on Apple, as well as the news catalysts. Looking at Tesla here, still super bullish. Big gap up on the Goldman Sachs evaluation. Bullish momentum, bullish RSI, volume picking up. Looks clean, and at this point, still watching 280.06, but you would expect a retest of this previous high up around 302. Moving over to Netflix and NVDA on the weekly charts. Netflix had a massive down week, down 10.3% on the week. Terrible, super bearish momentum, super bearish RSI. Look at that candle. Super negative, took out all these previous lows. You kind of had a double top forming here, took out that midpoint. You're still technically above 392.92, but I would expect that level to break, get down to at least the next level here at 368.75. And then all the way down at the 55 EMA, down at 340.16. Doesn't mean it's going to happen all in 1 week. You might even get a little bit of a retrace on this candle because it was so negative all in 1 week. But I would expect it to follow through on that move. RSI looks clean too, so you got the break, retest, break. Looks bad. NVIDIA also showing quite a bit of bearishness for the first time in a while. 2 weeks in a row of bearishness, took out my 447 level, looking for a push down to that 420 area. If NVIDIA is truly starting to pull back, you can see we're out of overbought conditions on the weekly chart for the first time in a while. We've been in overbought conditions basically going back to February of 23, so we've been here for a long time, starting to break down more here, clear divergence, and it does look pretty weak going into next week as well. Moving over to staples and discretionary. Staples threw a wick to the upside, still a slightly bullish candle, momentum ticking higher here, showing a little bit of strength, might see a little bit of a swing higher based on the weekly chart. It doesn't look great on the daily, and we talked about that on Friday. Similarly here on discretionary, big wick to the highs, looks like a double top or maybe a slightly lower high. Tesla still looks good, which is driving this higher. If Tesla starts to pull back, you would expect this to break down pretty dramatically, in my opinion. Structure is still bullish, and we were still up 1.8% on the week, but you do have to be careful with that lower high. Moving over to breadth on the 50 and the 200-day average. 50-day average continues to hold at this very important level, 32.22. We've been watching it for a long time. 200-day average established this trend last week, touched it again this week, and then rallied a little bit. Overall, a pretty bullish week on 200-day breadth. Interesting considering how negative some of the charts looked. We've been talking about this for a while. Breadth continues to show signs of life, but we're just not seeing that across equities quite yet. Looking at yields here, these basically have not moved all week. You can see the 10-year yield did go a little bit higher today, but we're not above this previous high from August. I would expect that these are going to hold at least into the FOMC announcement. Might see a little bit of a pullback from there depending on how hawkish the comments are. Still expecting that pause, so these will probably not move. Moving over to the dollar here, you can see we've had 9 candles in a row of bullish price action. Pretty unusual for the dollar. Definitely showing some strength. If this breaks out above this level here at 105.50 next week, that is going to be pretty bearish. You can see the last time we were anywhere near these highs was August of 22, where we had that big leg down in equities, which led to that big leg higher in the dollar. Again, a lot of dollar strength could lead to some negativity in equities, which is another indicator to the downside potentially. Moving over to bonds, J&K doing absolutely nothing on the week, straight sideways at the highly traded zone. Wouldn't expect this to do much over the next few weeks. TLT, on the other hand, absolutely colossal down move. Another leg lower, getting very close to these lows here from October. It does seem like it's going to take that level out. You have to go really, really far back to find any levels that are anywhere near these prices. And it does look quite weak, in my opinion. Moving over to the VIX, you can see on these weeks here, we've been chopping in the same zone for quite a few weeks. We've been watching this trend for a while, hit that level once again this week, ended up right in the middle of this zone. Momentum still ticking towards bearish. RSI also bearish, but holding at the SMA. At this point, it just seems like we're going to consolidate in this area. We did it for many months in a row here in 2018, 2019, and we're back in that zone now. Seems like that's what's going to happen. And a lot of the unknowns have come out of the market. Moving over to my accounts, I was down 0.1%. I lost basically $100 on the week, which is fine. The NASDAQ was down about 0.4%, so outperformed the markets. Should have made some money, and I didn't trade great on the last day of the week, which did not help me. Otherwise, looking at my positions going into next week, I have one put here at 184. I would like to see at least a little bit of a pullback to the upside from this big down move that we had on Friday. I also have a covered call here at 371. Pretty decent level at 370, which held on the Friday session. If that level breaks down, I will be looking to add quite a few calls to protect my position, if not taking it off altogether. The weekly charts do look very bearish in my opinion, and that's something that I do have to factor into my trading a little bit better. Let me know down in the comment section what you think of the FOMC meeting coming up next week. Are they going to surprise us with a hike? How hawkish are their comments going to be? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.